Welcome to a chilly April 29th. Scott Riley, the market update desk, NMLS 157524 with Mortgage One. Got a few things going on today and some headline. We do see that the White House announced they're going to continue the embargo on Iran. So that's going to be very geopolitical with what's going on. From that, we're seeing a rise in oil and Brent crude, both up again today. That's pushing mortgage-backed securities down and the yield on 10-year Treasury up. So a little bit of negative going out there this morning. Housing starts. Let's talk about some positive here. In March, we're seeing housing starts were up 10.8%. Pretty busy rate there to a 1.5 million annual rate. Now, housing permits, a forecaster of future inventory, fell 10.8% to an annual rate of 1.372 million. Now, that's down 7.4% year over year. Single family starts, the most important aspect of that, were up 9.7% for the month over month and 8.9% year over year. So, when we look at these, we're specifically looking at them in relationship to look at forward inventory. From that, we're seeing that this challenge on inventory is not solved anytime soon. That's why buyers getting in the market now are going to be less challenged with competition than in the future. Durable goods orders came in very hot. In fact, headline and the internals were far stronger than what the market had expected. Headline rose 0.8% month over month. The market was expecting a 0.5% gain. Now, the more important core reading for durable goods that strips out defense spending and aircraft rose a whopping 3.3% month over month, also well above estimates. Now, the reason for the unexpected strength can be attributed to data center construction seems to be going on everywhere now. And there was a front load of ordering materials and inventory before the Strait of Hormuz closure. Mortgage applications showed that interest rates were little changed from the previous week, but they're still down over 0.5% from last year. So some positive aspects there. Purchases and refinances were relatively flat on the week. Now, year over year, purchases are up 21%. Refinances are up a big number, 51%. One thing that we're watching closely as we go into tomorrow is a preview. Tomorrow's going to be PCE, so we're trying to preview that. The headline that we're looking at from consensus is year-over-year inflation to go up 2.8 to either 3.4 or 3.5%, and the core reading to rise from 3% to anywhere from 3.1 to 3.2%. Anything above those numbers, we're going to be a really challenged day tomorrow. We're also going to get later this afternoon the Fed Chair Powell's speech of the meeting that they just had, and he'll also have the Q&A session. I guess anything can go there. This is likely Chairman Powell's last meeting and last Q&A. Who knows? Are there some arrows out there in the quiver? We're going to have to wait and see. On the technical side, 10-year Treasury is kind of going sideways right now, going between a floor of 4.332 and a ceiling at 4.41. In fact, we're at 4.40 right now. So we're banging against that top level ceiling with what could be a challenging day with PCE tomorrow. I am expecting that top level resistance of 441 to be challenged and probably broken through. So we're watching everything really closely. It is volatile today. Let's see what the afternoon brings. We're staying on top of the market. Give us a call, 616-293-2189, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.